Good morning, traders. This is Jim Comiskey, Senior Market Strategist at MF Global, coming to you live on Tuesday the 18th. It's about 9 a.m. Sorry, we're running a little bit late this morning. Give you some color on the metals complex, amongst other things. The opinions that I'm about to express are mine and mine alone, and are not necessarily shared by MF Global. Okay. Gold is currently down $37.60 to $1639.20. Silver down 98 cents to 30.87. The copper down 7.40 to 330.35. The greenback is up 22 to 77.65, and the euro down just 49 to 136.86. Okay, a couple technical levels here. Okay, that I'm looking at in the gold. Now, there's a double bottom, basically a double bottom from October 4th, October 5th. The lows there, 1596, 1597. Okay, so I mean, we should find support at the 1600 to 1596 area. Okay, if you're taking a place in a trade based on this, okay, please use a tight stop. Okay, silver, I got support coming in at 30.24. It is another old low, and in the copper 323, same deal. You know, one of the operatives here in this sell-off, because it isn't just the metals that are coming off. We have weakness across the board in the grains, in the currencies, in the energies, and yes, in the metals. As part of the Dodd-Frank financial reform bill, the CFTC is meeting right now to discuss position limits for your majors, okay, for your major players in commodities. Let me read this to you. CFTC will consider a final rule on position limits as well as a final rule for clearing organizations and a change in the effective date for swaps regulation. All right, so this might be prompting some of your major players to lighten up their positions, okay? Close their books a little bit. Speculation on my part, 100%, okay? But I think there's something to it. All right, starting out in the east here, China's GDP printed at a two-year low, Q3, of up 9.1%. Admittedly, that's still quite high, okay, but two-year low for China's GDP. That definitely explains some weakness here too, particularly in the metals, okay? Now I'm going to flip to the other side of the coin here. Okay, in the UK, they have their RPI, which is their retail price index, which is their CPI, basically. It came in at up 5.6%. Okay, that's the highest inflation rate in the UK since June of 1991. Okay, now a lot of that had to do with energies. Okay, energy prices, gas prices soared in the month. Okay, but highest since 1991. Take note of that. Okay, the inflationary genie has been let out of the bottle, not only by the TARPs and the QEs and the QE2s. Operation Twist, by the way, does not increase the Fed's balance sheet. It's just an attempt to manipulate the yield curve. And ironically, the curve's kind of going the other way, but, well, it did initially. Okay, but we are starting to see signs of inflation. Now, stateside here, we had a PPI number at 7:30. We were looking for up 0.2. It came in up 0.8. It was all energies. Okay, now I'm just going to throw this out there for you. All right, now, generally, economic downturns are preceded by two things, okay? Almost always. All right, the housing market weakens, and we have energy spike. Okay, energy spike. It's here. Okay, so anyways, you know, once the bloodbath, you know, seems to subside in the metals, you know, you might want to just consider stacking. Okay, you do that according to your own analysis of your own finances, please, and your risk tolerance and all those fancy little words. Okay, I'm going to go back to what I was talking about yesterday, and I'll let you guys go. Again, they want me to limit my talking during this week. Moody's warned that it's going to slap a negative outlook on France's AAA credit rating in the next 3 months. Actually, that's capital A, double A minus credit rating in the next 3 months if the cost for helping to bail out banks and other Eurozone members stretch its budgets too much. All right, now, there's no doubt that, well, in my mind, in my humble opinion, I'm thinking that we're going to have some serious frightening headlines out of Europe tomorrow, Thursday, Friday, potentially, heading up to the EU summit of summits on Saturday. A couple of Greek, here, let me just read this to you. This is from CNBC. All right, let's back up. Okay, I broke into this biz. So many people that have followed me have heard me say this before, but I'll just reiterate. With Santelli, Rick Santelli on CNBC, in my humble opinion, he's one of the few guys that has credibility in the whole network. And again, this is my opinion. But I pulled something, what Santelli's taught me something, all right? Don't ever believe what you see right away, what the media wants you to see, the mainstream media, whatever. Look between the lines, okay? Do some of your own analysis and come to your own conclusions. Don't just agree with what some reporter or editor puts out there. Okay, now this is CNBC. Greece faces hellish week as debt crisis tests nation. As I mentioned yesterday, there's this 2-day strike, a 48-hour strike, tomorrow and Thursday in Greece. Okay, that basically the European or the Greek Parliament is also voting on those austerity measures tomorrow and Thursday. So it's all kind of coming together here. But I'll just read this to you word for word. Again, CNBC. Greece faces hellish week as debt crisis tests nation. Greece now owes more than 360 billion euros, or $500 billion US. Okay, I'm going to say that. I'm going to read that again. Greece now owes more than 360 billion euros, or $500 billion US. I think that figure is grossly understated. I could be wrong, but I've been busy. Okay, but I pulled up the CIA World Fact Book. Greece's GDP from 2010 was like 380 billion euros. Okay, so if CNBC is to be believed with this figure, it's low. I mean, I've seen basically 4, 5, 6 different sources that are quoting Greece's debt to GDP ratio in the 162% range. All right, so you question this right away. You question everything that's on this piece of paper. Check that. Everything that's in this article from CNBC, courtesy of CNBC. That's pretty much all I got, guys. If you'd like to email me, please feel free to do so. My email address is just the letter J, COMISKEY, at mfglobal.com, or give me a call at the desk. My number 888-800-5373. Please remember that trading commodities is inherently risky and not suitable for all investors. Thanks, guys.